A number of high-tax states have been blaming the new tax law for a shortfall in revenue. But it turns out that's not the only reason. Robert Frank explains.
Many of the richest states, from New York to California, saw unexpected multi-billion-dollar drop-offs in tax revenues in December and January. New York Governor Andrew Cuomo saying last month that the state collected $2.3 billion less than he expected, and he blamed the new federal tax law, which limited state and local tax deductions, and he claimed it was driving the wealthy out of New York.
SALT encourages high-income New Yorkers to move to other states. And what you have to remember is even if a small number of high-income taxpayers leave, it has a dramatic effect on this tax base. Tax the rich, tax the rich, tax the rich. We did. Now, God forbid the rich leave.
Almost every other high-tax state, from California to Connecticut, New Jersey, and Massachusetts, reported major shortfalls in December and January compared with the forecast. California's tax receipts came in $3.4 billion light. But tax experts and accountants tell me the fall wasn't probably due to the wealth flight, but more to the stock market, specifically that big drop in December. The biggest source of the shortfalls was estimated payments. Now, those are payments made for non-wage income, usually from investments or businesses. Now, tax advisors say wealthy investors sold stock in December during those market declines to get the tax losses. That lowered their tax bills for the year, but it also created a shortfall for the states. Now, Moody's saying in a report that the revenue decline was owed in part to a volatile stock market's impact on capital gains income. The markets are back, of course, this year, but those losses can be carried forward, so we will see if there is more of a price to pay for those December declines. Now, states that don't have much exposure to the stock market have been faring a lot better. Arkansas, Wisconsin, and South Carolina, whose populations aren't as tied to Wall Street, hedge funds, or stock-based compensation, all reported recent surpluses. And get this, they're planning to return money to the taxpayers. Now, for the states, there's a price to pay for having their fortunes so closely tied to the 1% and the stock markets that drive their wealth. For Nightly Business Report, I'm Robert Frank.